Ya. Sí, es así.
To hike or not to hike? That's the question. If you want, we can ask Janet Yellen. Let's ask Janet. When they let me, she say, Janet, who knows? Let's again, not me.
I think Val is going to tighten up rates this today. Actually, Mauricio, it's great to be here with you and Val. Val's a trooper. She had a power outage and she got to an internet connection, so great to have you with us, Val. The market's acting like they're not going to do anything.
Hi guys, everyone, welcome. It's going to be tough everywhere you watch it, but I'm here and getting ready to see if Ms. Yellen surprises with a hike, which I'm really expecting, right?
Yeah, it's good to be here with
Okay, so
you guys.
you're looking for her to make a move then.
I do believe that we are going to have big moves, whatever the Fed decides. The Fed can be on hold and be extremely dovish, and that's one extreme of the equation. And the other extreme would be a rate hike and an extremely hawkish Fed. I'm pretty sure that we are going to get something in between. But anyway, it's going to be a market mover, you know, because the market has been accumulating so much tension ahead of the event. Currencies have been flat for what, long? Maybe some are moving, but look at the euro. It has been hovering around 13 for the whole week. So I'm really hoping we had a strong movement, market movement today, no matter what, okay?
Okay, so we've had this recovery in stock indexes going into it. The Dubs are saying that if they do nothing, we'll have an explosion in the S&Ps back to the 2030, 2050 range. I've been looking for a recovery to 17,000 in the Dow. That could happen. You know, I interview a lot of smart people, including you, Val, and the diversity of opinion is wild. You know, Ed Matt says they won't tighten because China needs to stabilize late tomorrow, thinking that they will hike, and that a lot of people thinking that the Fed rate hike is already in the dollar. He thinks it's not priced in. So I don't know what to do, and you know, for a lot of our viewers, it's okay to not know. In fact, we have a slogan here: instead of predicting the reaction, react to the reaction. So that's what we're going to try and guide you to do today.
Yeah, indeed. I do agree with that. I do believe that we're going to see a couple of wild spikes either side of the board initially, and the market will take time to settle, particularly after the speech of Yellen, which is in 40 minutes from now, 30 minutes before the rates release. So I believe that we need to wait and see, right? We have waited for so long that 40 more minutes, what can that do to us, right? Anyway.
Unless it's the same movie again, Val. Let's say she doesn't do anything, okay? And, okay, in the press conference, she's probably going to talk that, yes, we are on the glide path for higher rates. The market's going to just begin to obsess again. Will it be October? Will it be December?
Yeah.
And it's almost like Groundhog Day to me.
Yeah, so that's the main reason I believe that she will raise rates today, right?
Okay.
to end this pain, you know?
Okay.
Anyway.
I know that when she mentioned raising rates, I don't know, about 4 months ago, she mentioned that they want to have bring rates back up so they have shock absorbers in case there is any type of exogenous event. Since that time, China has happened. We've seen the meltdown in China. So it's almost like the Fed knows that they are going to need ammunition. People starting to say there's a 50% chance of a recession in the next 12 months, and they have no bullets now. So, you know, that's my view. The real reason why they want to take rates up is so they can take rates back down if they need to.
Yeah, I agree with you, Dave.
But what I can take out of my mind, and speaking a bit more seriously, is the fact that a couple of meetings ago, Yellen said that they were ready to offer 2 rate hikes this year, right? 225 80 points rate hikes. So if they actually are remain on that path, first one has to be HJ, and the next one in December probably. But I don't know. China is indeed a problem that surged after she said so, and something to, of course, take into account. But the market has been acting this week like if there's no chance the Fed will rate hikes, you know?
Yes.
That's the market reaction this week. So I do believe that if they actually hike, we are going to see a strong dollar momentum that will probably extend a couple of days. I don't believe it will be enough to confirm the dollar bullish long-term trend, if you know what I mean. I don't believe that at this point 1 rate hike will be enough, but indeed it will help the greenback advance sharply. Gold will be poor gold below 11.
You know, in a counterintuitive way, when you think about it, the sell-off in equities, and I know I sound myopic, I keep talking about equities, began on the Fed minutes that sounded dovish, that they weren't going to tighten, meaning that people think the Fed thinks there's something wrong with the economy, so they're not going to tighten. So actually, if they did move, the markets, the equity markets, may actually take it as a vote of confidence that
Exactly.
the Fed has confidence to go ahead and raise rates, and the market could handle it even in advance after the Fed.
I do believe so. I do believe that stocks in the U.S. have been reacting to data also this year more than to market sentiment or to Fed's possibility of a rate hike, rate cut, easing, no easing, or whatever. The U.S. stocks at this point need the U.S. economy to grow to recover ground. So, as you said, a rate hike should be like a vote of confidence.
Yes.
The economy is recovering, right?
Yes.
Yeah, so mutual funds managers say that a hike will be a boost for the economy. So
Yeah, indeed.
yeah, they need. I think if they don't hike rates this year, it will be a really bad signal for the economy. So
I
they
do.
need, yeah, they have to do. Perhaps not today, perhaps on October. Yeah, yesterday we talked about with Ed Matt, and he was not sure about today's hike.
Ed said that he didn't think they would, and the reason is China. He showed the Class A shares, and he said that the Fed's going to wait until that market recovers over like 3,700, and then they'll have the comfort to go ahead and do it. They won't do it because they fear systemic risk out of China.
To be honest,
And that's what the World Bank fears, and that's what the IMF fears, and that's what Larry Summers fears. So it would be a very independent statement for Janet to go ahead in front of all the international pressure and from Nobel Prize economists to go ahead and make the move. She would be showing her independence by doing so.
well, not that the Americans don't like to do that. Americans
That's true.
love to do that.
So let's go to trading. Let's go to the charts. What do you think, Valeria, will be the reaction of the
Well,
the
of course, I will be waiting for the outcome, right? But I do believe that if the Fed remains on hold, the euro will probably take this weekly high pretty fast, and we can go up to 1440.60 in a quick spike, where we have several weekly and monthly highs. That's the level I will be watching for, 1460 as a probable bullish target. And on the other hand, if the Fed stays flat, we can see a sharp decline towards 12 and even lower toward 1116. What I'm thinking also is that I don't believe that if the Fed refrains from acting today or it's extremely dovish, of course we are going to see the dollar fall, but I will be preferring, okay, if I have to buy something, that will be the dollar pound, because pound dollar, sorry, because the market is pretty much convinced that the UK will be the next one to rise rates, right, in the first half of next year. So I do believe that any gains the pound has will be much more sustainable than euro gains. We should not forget that over the past few days, almost every possible ECB member officer has been saying that they are ready to extend quantitative easing if required, if needed, meaning they don't want a stronger euro, sorry. So I don't expect big gains in the euro, or at least not long-lived, right?
That's an interesting level you brought up in Euroval, from the high that we had at 117, and then we broke all the way down to the 111 level after the Draghi press conference.
Yeah.
I have 61.8 back at 114.74.
Yeah.
And that would still be just a retrace of the recent decline that we had from that 117 short squeeze that, you know, I happen to have been somewhat accurate on, that we would clear out the 114 bulls. So this 114 bears, so this 114 to 115 area, if it gets up there, could be a very tasty short.
Yeah, take a look at the daily chart. I put it smaller, but see, we have May high in there, June highs in there, plenty of intraday highs from February, sorry. So
beautiful.
For me, it's,
you know what I love about that, Val, and you know, I talk about this when traders, they use different methods, come up with the same areas. There's confluence because they're coming up with the same areas based upon a completely different method. Actually builds my conviction that that area is significant.
Yeah,
so,
I do agree with you.
Yeah. Okay.
Okay, we are less than 1 minute away to go. Please, everyone, remember we have a little delay in here, and you will see the reaction first in your charts, then hear it from us. Okay, but here we are. Okay. One more thing, I do believe that this one will be pretty interesting. The market is rallying against the greenback ahead of the release. This would have been a good day for a leak.
Yeah, there goes the euro up towards going to clear out the stops of the high of the week here.
Okay.
Pound is diverging at new highs, but 156 is a region of interest, 56 to 50. Getting the nice rally in Aussie too. Gold's muted. Now gold's moving, so they got leaked the news a little later. So it's still not out, but the market's trading like they're doing nothing.
Since we don't have a hike if the market is rallying so fast against the greenback.
Right now the gold is rallying.
Yeah, no rates.
Here we go.
No rate hike. What a big disappointment for me. I lost.
That's why the market knew. So here comes the blow up, maybe in the S&Ps. Euro already has a little tail. Yen, great. I mean, wild action here. So I was leaning towards a short in buying the dollar on no Fed action, and so far that's working. But I have not done a thing. You're getting nice reversal candles in all the dollar pairs.
Yeah.
And euro leading the way. Pretty interesting. Everyone thought the dollar would collapse on it, and instead it turned out to be a dollar buying opportunity.
In fact, the dollar is rising anyway against the Japanese yen.
Yeah, look at that.
A couple of pips above previous daily high, but still too early to say, guys. Still too early to do anything.
Well, you know, I thought the yen could get above 122. You know, maybe I'm speaking too soon, but that's where I want to start looking at shorts. That's going to be right around, although the Dow is not acting that great on no interest rate hike. It's giving it back. Huh.
FOMC.
Gold press the highs.
Yeah.
Yeah. Stock market doesn't like it, like everyone thought it would.
Yeah, okay. Seems the Fed is the great problem for the Fed is the slower global growth conditions abroad. They're 1% lacquer. Just 1%.
Was the same.
Only 1%. See, so they are worried about China.
But
so tread carefully. Val, on red days, I've seen the method that she uses. You put up a 15-minute candle there and then wait for it to close and then see which way it comes out of that range. That's usually, if you want to scalp and trade this craziness, not a bad way to go.
Yeah, but at this
Again,
point, I
giving
feel
it back.
there we go. I'm watching that the euro and the CAD are about to make fresh highs. So seems we are dumping further the greenback as expected. But I was saying that I do like that system of a 15-minute candle. Don't forget we have the speech in less than 30 minutes. So the market we may want to hear what the Fed, Shalen, sorry, has to say. Anyway, I do believe that they already released the statement, right? It's there for reading.
And the projections, I think.
Uh,
Well, I told you, winter is coming.
yeah.
That's
But
what we say,
so
Janet
that's the
Yellen.
point. The Fed dot plot and central tendencies. What a big disappointment it has been, Miss Shellen. Anyway, uh,
For you, maybe.
for me,
Not
yeah,
to the not to the dollar bears and gold bulls so far.
gold bulls
To
are
the stock bulls, yeah, 2010. Huh.
stocks are pretty much neutral. They are doing nothing. You're at flat
Didn't
right now.
quite get the 17,000. What was the high? Like 16.8 or so in the Dow.
The euro is the dollar Japanese
Yeah,
yen, sorry, is
it's breaking down.
challenging. And it's been moving in between Fibonacci levels pretty clearly over these days. So if we lost 120,
Yeah,
30,
forget 122 if that happens.
yeah, exactly. We are going to go down in here. And there we go with euro flirting with 14 and ready to go further higher. The S&P is in red, Dale. It's losing ground. What seems pretty bullish for me lately is Aussie, and seems today Fed has helped Aussie to continue
So
its
really kind of the same reaction we had from the Fed minutes when they sounded dovish. The market didn't like it, and the dollar didn't like it. And getting the same type of action here. Actually, Val, you know that monthly trend line on the Aussie comes in around 72 and a half, 72.60, and this could end up being a pretty good shorting opportunity in
I
the
have it
Aussie around
a bit
72.60.
there we are. It's struggling around the line in the monthly chart.
And keep in mind, a monthly candle isn't closed until the end of the month.
Yeah, we
So,
have still 2 weeks
couple
to go.
weeks.
But there we are around the trend line right now. Anyway, pound, it's struggling with the next Fibonacci resistance and advance up to 56 so far. I guess the market is trying to make something up of all this.
Now we're coming back.
Yeah,
So the pound looks to be displaying a little bit less strength than the euro here.
less what,
You can
sorry?
tell the pound is much closer to being an unchanged candle than the euro.
Oh, yeah.
And the Aussie 72.20, that's a nice fade in Aussie. What was the high in the euro? 14.20? 14.
1401 in my charts.
Okay.
Okay. So
I didn't take a look at the projections. Do we have some kind of reviews in there?
you have the projections.
I didn't look at them. I'm trying to right now.
What's the chart under the S&Ps, Val?
This one is the Canadian.
Oh, CAD, okay. Got it. So Aussie has the biggest tail in Canada. So the commodity currencies have the biggest tails.
Yeah.
Although the tail in the yen isn't bad either. So it held right where you said it had to.
Yeah,
Well,
in the next region.
Dollar's trying to come back.
So the
Because now
projection,
perhaps they're afraid she's going to talk like a hawk. All right, we got the 0%. We got no move. And during the press conference, she's going to make it sound like it's next month. So
So,
that could be why people are taking profits on their long euro and pound and Aussie positions in front of the press conference. They got the news they wanted. You know, they bought the rumor. They sold the fact on the Fed not moving, and now Yellen's going to talk in, what, 22 minutes? Is that when the press conference is?
yeah, 22 minutes.
Do we have any questions, Mauricio?
or there is people asking for the gold. Is commenting about the gold.
A goal? Oh.
Yeah. What is your take in the gold?
Well, I would have expected a stronger advance. I do believe that the gold remains pretty much bearish, and I would have expected a strong slump with dollar strength, but it's pretty logical that the metal does not rise much with a no hike, because it has no self-strength. You know what I'm trying to say? I believe that we may see some intraday advances. We can go up to 32, but honestly, I'm not seeing much of an upward potential in gold. I believe that the bears are still in control in here.
I see.
And the flip side, people will say that we put in a higher low after that $100 rally. We pulled back 70, and you know they'll be talking 1,200. The bulls are talking right now. I hope
1200.
you're right, because you know I'm waiting. I'm still waiting to put on like junior gold share positions, and they've been performing real good this week. And I hope you're right, and we still see new lows under 1080. But right now, it looks okay.
Yeah.
And if I miss it, you know what? It won't be the first or last time. And you know what, you traders, if you miss something today, don't worry about it, because there's always another trade, and most likely in less volatile conditions. So you don't have to do anything. Forget about FOMO. FOMO is fear of missing out. I guarantee you that if you miss everything for today and tomorrow and the next day, eventually another setup will come your way. So try and avoid what I did for decades, and that's impulse trading. You're afraid you're going to miss a move. Well, I got to get in. I'm going to miss it.
Commodity currencies are accelerating their advance against the greenback.
Yeah.
I do have a strong resistance and a probable bullish target now in the OC around 60 to 40.
So yeah,
Around there.
I think we're diverging up there too. We are diverging.
Yeah, that's the level.
Canada
And if
going.
the euro takes the high, it can go up to our 1460, 70 region, right?
And the stock market's recovering. Go, baby. Give me 17,000 into the equinox next week.
A large majority of Fed officials still believe the central bank will raise rates before the year end. Well, all the excitement won't be enough. Will be the same, sorry.
It looks like we're going to that area, that fib area in the euro into next week, Val. You know, the mid 14, 115 area.
We can.
Kind of looks like that's getting baked into the cake here.
Yeah. The pair can go a bit more right now because it has daily basis. We have, okay, 110 pips range so far, so we can see another 20 or 30 pips more. And if we get a very dovish shilling, then it can go even farther higher. But keep in mind that it's weird to see despite Fed or whatever, days of 200 or 300 pips movements, right? There's certain range and the market tends to respect it. Okay, the Japanese yen is breaking lower. Aussie is at like 72.40, so there we go.
I guess I was too patient to wait for my sell in the yen above 122. So, like I was, the advice I was giving everyone else, if I miss things today, I miss them, there'll be other entries.
I won't consider missing entries on trading today, to be honest. I don't like to trade central banks. I don't like to trade in days we have payrolls. And today it was maybe easier, sort of speaking, because if a Fed was going to hike, would have hiked. We have had a dollar rally, and since they didn't, here we are with a bearish dollar. But anyway, I don't think it's the best day to trade, you know what I mean? Because the technicals are distorted by whatever the market does and the reaction to the news. So
This is Algoville.
yeah, that's it.
So we're getting close to your number in the Aussie. 72.40-ish that you talked about.
Yeah, we have a strong resistance level there with post 34. Okay, 15 minutes until Janet starts. Okay. That's one of my cousins' husbands. Sorry. He's outside, so he does not know I'm here. But it's small neighborhood, so anyway.
I wonder who Donald Trump is going to name the next Fed chairman. Any guesses?
Do you believe that Trump is going to be the president of the United States of America? Really? Really? I will lose my faith in your country, Dale, honestly. If you vote Donald Trump as president,
Well,
you will be down 5 points in my esteem, you know? From 10 to 5 in a blink.
I think if Donald Trump takes the presidency, the White House, he will nominate, I don't know, Steven Seagal for chairman in the Fed.
Secretary of Defense Steven Seagal.
Steven Seagal.
He's getting a little, over the hill, but yeah. I know what kind of movies you watch now, buddy. So we were looking at the guppy at 190 potential resistance, and because of yen weakness, the guppy is putting in a bit of a negative candle here on this. Some of the yen cross is under pressure. Aussie yen was looking for a rally back towards the 89 level. I don't know if we got there. Let's see. With the strength in Aussie, that was the breakdown. That 89.90 level. No, not even close yet.
No.
Well, there is somebody asking if we expect to have a hike this year, and of course, the Fed has been saying that the whole year, that they expect to hike rates in 2015, so perhaps in October or winter. What do you think, Valeria?
At this point, I believe that it can happen in any upcoming meeting. Remember that Yellen has said earlier this year that it does not have to be a specific meeting with a statement or a speech scheduled afterwards, the one that brings a rate hike. Remember, she said
Yeah.
so. But anyway,
Yeah, I think October could be a good month because they will have the 3-quarter data.
yeah.
The earnings. Yeah. You know, I heard a pretty smart guy today on CNBC, Alan Blinder, and he used to be the vice chairman, and he was looking for them not to do anything. He's looking for December. But I've heard from some other financial guys December is kind of a messy month because there's window dressing into the end of the year. But wouldn't that be a strange time to do it right before Christmas? They'll start calling Janet Yellen the Grinch if she does it in December.
It could be a nightmare, you know. It's, all the mutual funds on people closing position ahead the year end, and of course, interest hikes. It will be very painful for the stocks market.
Yeah, it will be a big mess if they do in December. So it's October and November are more likely dates, right? Anyway, let's hear what she has to say right now.
Yeah.
Now that she complicated our lives by not providing a rate hike.
Well, so the news is there is no news yet
About what?
about the interest rates.
Well, no, there's nothing. I'm checking a bit my Twitter account. Not seeing much.
And Dale, he was saying that to buy any dip in the dollar this week in your interviews.
Dale Pinkert was saying that.
Yeah, of course, Dale Pinkert with that.
But Blake Morrow said he was looking, Blake's a very good trader, but he said he was looking to come in long the dollar into the Fed. He was expecting a Fed hike. Ed Matz was not expecting a Fed hike.
Yeah, and
Ed was saying that both the rallies in euro and pound, after they cleared out stops which is what they've done, that it could be a very good shorting opportunity. He was looking for the dollar in the bottom. Here's another dollar bull, Adam Button. So I'm sure Adam's looking at this euro rally as a potential shorting opportunity. Am I reading your mind, Adam? Call me Dale Kreskin.
Yeah, I mean, for me, it's an extraordinarily dovish statement. I thought the Fed would be dovish. I thought they would do this, would not test the market's resolve, and they clearly got the message from the market that there was no time to hike. But they didn't give any sort of hawkish kind of message, and for me,
maybe that changes in the press conference.
Well, that's it. I mean, we've got 9 minutes to go, but for right now, all things being equal, in the press conference, and no shocks there. I think this is an Aussie dollar green light. Australian dollar looked good before this, and I think it looks great now. The techs are set up nicely. Aussie dollar longs. I see why the U.S. dollar is getting beaten up, but you can get the euro to come back off. I think as the risk trade comes on, you get the carry trade going again. So I'm not enamored with euro longs here, and I follow what you're saying there.
So what are you looking for in Aussie here, Adam? When I talked to you a week or so ago, you were talking about the Aussie shaping up, and that was a few hundred pips ago. What kind? I mean, it was over par a few years ago. So is this a major bottom or just a trading rally, just like gold?
Yeah, that's what I said. Nothing's changed in the bigger picture. I mean, America's still doing better. The commodity cycle, super cycle's still over. China's still slowing. This is one month, one decision, but it shows that the Fed gets it, and it takes that idea that U.S. rates were going to go to 2-3%. I mean, it's nonsensical. It's not going to happen. So you have to kind of take that out, and that gets the Aussie up, maybe in the upper 70s at the better part of it. And another one is CAD. I mean, it's just great news for the Canadian dollar. We've had this about 2.5 cent range over the last month, and you get that tightening coil, and then you get the bounce.
Well, the crude breakout helped, huh? The other day,
Yeah.
and I know you're still bearish crude. Do you think we could get to 50, 52, and that would set up a good long-term short in the crude oil, buddy?
I mean, with oil, you're hesitant to pick the levels because a bit of it comes down to the headlines. Now you've got, this is important, and I think it's bullish for the U.S. dollar here. I love that dollar CAD chart. I think that's breaking down. It's going to break down for some time. It's such an incredible run in these trades, and it's all been predicated on the idea that the U.S. economy was really roaring and the Fed was going to really hike. And the U.S. economy is kind of mediocre. It's still better than a lot of other ones, but the Fed is going to be much more cautious as the dollar strength it sort of starts to create a bit of a feedback loop. And this is the big retracement that we saw. We saw it really setting up for the first half of this year. We're up now off the bottom in Aussie, 3, 4, whatever, 100 pips.
So about 128 in Canada, USD CAD, is that a level that might be interesting to you? 128 USD CAD?
Yeah, we'll come off about 3 to 5 cents from where we are. We are 128, 127,
Okay.
and they intend to overshoot. If the dollar really gets, I mean, the Yellen's important. I'm hesitant to pick any levels ahead of the next, 20 minutes or so. But the, dollar yen, again here it's probably going to be beaten up, but it can come back. And stocks are, I think, a green light here. The Fed has once again shown that they will never test the market patience, and I would argue against it. But when the Fed, if they want to really hike, they need to set it up better than this. You can't go into a Fed decision about the first hike with people being so divided on it. And then hike anyway. You're just going to get kicking and screaming.
Yeah, isn't the whole purpose of the Fed being public and their attempt to be transparent is so that markets are prepared for what they do, so that the markets, it's kind of like baked into the cake.
Right. They've forgotten about that entirely from where I stand. They just don't seem to really get. They seem to think there's like a virtue in letting markets guess what they're going to do every time, and there's more to be gained from having some certainty, especially on the first hike. You give markets a bit of certainty. Okay, we're going to hike, and then instead of talking about the hike today or whenever it is that they finally hike, we're talking about okay, what comes next, and then it gives the Fed a chance. The headline then is Fed hikes as expected, plus offers soothing words on that they're not going to continue to hike and that they're completely ready to hike and that all these programs they have in place to make sure the rates go up are in place. And it just adds a little bit more uncertainty rather than, okay, well, they won't, oh, they did, oh no, what does it mean? And they've really gotten away from that in this over data dependence. I mean, was anything that they learned over the last 3 weeks going to make a difference? I mean, obviously not, because the numbers were pretty good. Retail sales on Monday were great, and it didn't change anything, and it doesn't even look like it was a close decision. So, why not just come on and say we weren't going to hike? We didn't need to have all this volatility over the last month.
There's a rumor that Donald Trump is so disgusted with the Fed that he's going to be selling all his real estate and buying the Fed. What do you think?
He bankrupted. He can find a way to do it. So, does this make the Fed a target again? I guess it doesn't. If the Fed would have hiked and caused some volatility, but maybe it does anyway. The Fed is unfortunately now part of the political discussion, and in the long term, they'll slip up, right? Whether this is a mistake, I don't think it was a mistake, but they will make a mistake at some point. And then, the knives are just going to be out, and it's going to keep happening, and then maybe we change the mandate, or maybe it becomes more of a politicized thing. There's nothing good that will come from a politicized Fed.
So what are you thinking in here, Val?
I really don't know what to think. As I said, I was really hoping or expecting or believing that we are going to have a rate hike today, because it does not make much difference whether they make it today or in October or in November, as I was saying. So, but I do believe that the Fed will probably continue to be in the tightening path and leading the way in the change in policy, monetary policy. Sorry. So I do believe that at some point they are going to start, and that will be a big change in the market. I don't understand much what they delayed, but yeah, well, here we are. So selling the greenback alongside with the market.
I'll tell you something I've noticed on the gold here, because I follow the shares, and with what gold's doing, the shares are very muted. GDX is the gold share. It's barely up 1%. That's not a big move in the gold shares. So the market might be smelling a dollar comeback. I don't know about you, Adam, but I think there's some good shorts setting up in both the pound and the euro into next week. Val identified an area around 1470 or so. That's 61.8 back, and she has a huge resistance line there. And there were targets about 56.50 in the pound for this advance. Could this have just been a retracement rally in these currencies before the dollar reasserts, or is something changing?
For me, the spot to watch if you want to buy the dollar is the yen, and I agree with what you're saying on some of those other spots. But the Bank of Japan, if they start to see 117, 118, 119, lower and lower, that makes them more likely to get into the game again in October. Yeah, I mean, they've been a little bit more hawkish, but they'll come back in, and I think on the risk trade dollar yen, if that's the spot you want to buy the dollar, to me that's it. And on gold, and I think, if you look at the Fed decisions historically, this is a big decision, right? So you have traders coming in right now. We're 29 minutes after the event, and picking up on moves. Real money takes longer to move, and I think in gold, and I think in some of these other trades, it's tomorrow that they come in, it's Monday that they come in, and some of these stock trades, it's good for that, Aussie, something like that. The money isn't really to be made in the first half hour. It's going to be made over the next week.
Did you come in flat to the Fed? Do you take positions into red events? I know you're a news trader. Did you trade this news?
Yeah, I came in long stocks, long Aussie, and so I was a little late.
Okay. Congratulations.
Something for that, but I mean, not always, not always. But I carried stuff through, small sometimes, large sometimes, but for the most part I trade headlines, and yeah, we're doing a bit of educational stuff at our site as well right now. So some banners on the site if you want to check that out, and we can talk more about news trading, because it's what I really believe in, and I like to talk about it. So
what do you think about the move in VIX from 55 to 1983 last?
Interesting. It was the longer term VIX stuff, and I think the trades are short the VIX always, but you can just get blown up in the meantime. It's tough to time because it's always going to fall back down. But October is such a volatile month in general. Yeah. This volatility will continue. So why do we have volatility? It's not because of the Fed, right? It's the end of the commodity super cycle. It's worries about China, because China's so opaque, slowdown in emerging markets, and you have some central bank divergence, right? The Bank of England's talking about hiking, Canada we're cutting, Australia cutting. So nothing really changes in terms of overall volatility, and there will once again be problems in China or the U.S. And maybe this even creates some questions about, well, what does the Fed know that we don't? I don't really follow that line of thinking, but there could be some volatility in that.
Thank you, buddy. Thanks for joining us today.
Well, yeah,
all right, so on to Yellen there, right?
Yeah.
Yeah.
So there she is.
Thanks so much for having me on, Jane. Look forward to chatting again.
Thank you, Adam.
Yeah, just a question. I know you are bearish in oil. What do you think about the Goldman Sachs call for an oil for at $20?
I believe in it entirely. I mean, well, you have to trade around it because you get these $5, $6 squeezes. There's been a bit of good news. Now you can get a bit more of a squeeze in oil, I think. But we're probably within $5 above here, or 5%. That will be the time to short again, and take a close look at the technicals, find some levels, and get short and protect the risk. But I mean, we're right now. This is usually the low point of the year in U.S. inventories, and we're massively above where we normally would be, and they'll start to build from there. There's going to be a point when people are absolutely dumping oil on the market, and it will be into the 20s, I believe.
Okay,
I
thank you. And there is
concur.
another, sorry, there is another question. It's completely separate, well, not. But what do you think about the dollar against emerging market currency like the Mexican peso or the Colombian peso or even the Brazilian real?
But aside from Colombia and Mexico are two of the markets in the world that I believe in the most, and they're getting a bit beat up on oil and on outflows, and I don't think the time to buy them is now, but they will benefit from weak currencies in the longer run, especially Mexico. They're building factories at an enormous rate in Mexico. I mean, the violence will stop there. And Colombia, I just think is so set up for investment, flooding in at some point in the next cycle. But these are amazing long-term trades are starting to set up in both those currencies. And
Well, you're young. You're young, Adam. You could hold through. You could hold and be there. You're a young guy.
You know what I think the best investment is? Acapulco real estate. You have a beautiful beach there. I mean, you have tremendous violence, and there was a trouble there and everything else.
Drug wars.
Have
you been pricing Acapulco real estate?
I have looked at Acapulco real estate. Okay, you're close to America, beautiful beach, but I mean, it's an investment. I don't think you want to go there for the next 5 years anyway.
Okay.
But that sort of thing, and that money starts to work its way in.
Yeah, you're a beach boy. Whether it's Panama, Mexico, you love the beach, don't you? Canadians don't have a lot of coastline unless you're especially in Montreal.
Yeah,
not much coastline.
Colombia is beautiful, so love it.
Colombia.
Yeah, that's Mauricio's homeland. So what do you think of that, Mauricio?
Well, what I will say, Colombia is beautiful. Cartagena is spectacular. Barranquilla also. Have you been there, Dale? I know that you haven't, but you, Adam?
No, I've been to Panama and I've been all over Latin America, but not, and Colombia is right at the top of my list. Or Medellin, it's like about 22 degrees Celsius every day, which is for my warm Canadian blood, about the best I can tolerate. And I heard it's all just a beautiful, beautiful place. And I think it's set up for a great future. But right now, it's I mean, there's problems that need to be sorted out. But that's the ebb and flow, then.
Where is Nirvana, Adam?
Pardon?
Where is Nirvana?
Yeah.
Where is the haven in this world of trouble? What do you think? If someone put a gun to your head and said, Adam Button, there's going to be such a financial crisis, it's even going to affect developed nations, not just places like Greece and what's happening in Europe with immigration, where would you go?
Yeah. I mean, you got to move around, and that's the trick. There's certainly beautiful places in the south of France.
That's right. Be an international man. That's what they call it.
But look at Colombia. There's a war there. A lot of people watching Narcos right now on Netflix. Great series, and it was a horrible place 20 years ago, and now real estate is more expensive in the United States in a lot of places in Colombia.
Wow. Yeah, I've been watching that series too. I brought it up to Mauricio. Actually, it's a great series, but pretty tragic what happened to the Colombian people during that time period.
Yeah, Colombia has a very, very tough days. 20 years ago with the narcos, many bombing in the streets, many violence. But right now As you say, Adam is a good country with many investment opportunities. And okay, so let's come back to Yellen. He's saying that it's important. They will wait for further improvement in the market and the labor market. And let's comment.
Why doesn't she just spell China, Mauricio? China. That's why she didn't go. Why doesn't she say it?
Yellen, you say?
Hmm. Oh, now
Well,
she's
no.
talking. She must have heard me. She said it's now saying monitoring developments abroad.
Yeah, she says like recent global economic and financial developments are likely to put further downward pressure on inflation in the near term, and said that these developments may also restrain U.S. activity somewhat. So,
She's afraid of systemic risk.
yeah, a
Like
bit.
that Matt said.
She also added that at this point, it has not led to a significant change in the committee's outlook of the economy. But anyway, it's a bit of a change in her wording and the statement compared to the previous one. She's also concerned about oil prices. The recent
Going up or down? Obviously down. Adam, what's the state of the fracking industry and the junk bond market in oil with the recent recovery in oil? Is some of the pressure being taken off of some of these guys?
Very little in that case. I mean, you get these regular bounces, the same kind of squeeze we had in oil. And I mean, you need a much higher oil price to sustain some of this investment. Eventually, it'll go offline. But for right now, the Australian dollar's running away here, and I'm just going to have to hop here and check back on what's happening with Yellen. And thanks so much for having me on, and talk to you again soon.
Okay, buddy. Congrats on your Aussie call. Nice work.
Thanks, guys.
Okay, thank you, Adam.
She's still, Val, she's still looking for inflation to return to 2%. And if you notice what's going on with gold today, a weaker dollar would accomplish it. Maybe that's why another reason. The large transnational corporations complaining about a strong dollar. Maybe that's part of it. She's afraid of the dollar strengthening.
She actually said so. So yeah, I do agree with you. The Japanese yen broke lower, so below the support, and the Aussie reached that 72.40 and stalled, but remains quite close. So I do believe that we are going to see a bit more of dollar weakness over the coming sessions right now. But the euro seems a bit more unwilling to break above 14.
Yeah, euro's left a nice little tail.
Yeah. The committee charge is appropriate to wait for more evidence, including some further improvement in the labor market. The board said it's confident that inflation will rise to 2% in the medium term. I do believe that the statement is quite dovish, considering that she is not compromising with a December rate hike, not to say October and November, right?
So she's not hinting at anything, Val, about when they might move to. So this year could be off the table.
Yeah. So
she's saying there is an argument could be made for a hike, but the decision will depend on a wide range of economic and financial indicators. So it's kind of makes not.
She's making no commitment with a rate hike, no date, not like the 2 rate hikes before the year end we heard a couple of meetings ago. So I do believe that it's even more dovish than I would have expected it. So there we are, pound breaking, everything's breaking higher.
Yeah,
And we
because
will,
they are the fund participant has lowered their path for the federal funds rate for the hike. They are lowering the expectation for a hike.
yeah,
So it's
I was checking in my Twitter that at least 3 of the voting members are talking of a rate hike for 2016. So overall, I believe that this dollar weakness will extend, right? The Fed has set the tone for at least the rest of this month.
well, there is perhaps, well, if not, it wasn't today, but there is a meeting closer, one meeting closer, perhaps in the next meeting or the next two meetings. But the Fed will definitely go up. So it is bullish for the dollar.
I'm reading your high tweets as said, and one of his tweets says strong dollar mentioned more than once, meaning that Yellen is really concerned about dollar strength. So
And stocks are enjoying the situation.
Yes.
They are back above 2000,
Yeah.
back to highs.
I think Pinkert said 2050, 2030, 2050.
For
yeah,
I'm
today,
having a hard time not pulling the trigger here, but I'm trying to be. I'm viewing this rally in equities as being a failing rally. Even if we get to 17,002, keep in mind that the Dow was at 18.3 in April, so it's potentially a failing rally in the market. W.D. Gann teaches to look for reversals around the change of seasons, and I think next week summer ends, my friends, and we head towards fall. I think it's September 23rd is the equinox, and we enter the fall trading season.
September 21st. Okay.
spring
Look
in
at that,
here.
Oh, that's
standing
right, it's
high.
spring down there.
Yeah,
Got through the winter, congrats.
finally.
I'm
So
actually happy about it. It was 95 here in San Diego for a few weeks with 80% humidity. I thought I was in Florida. So
yeah.
there's the Dow up 100 now. They're squeezing every bear. If you look at the S&P chart over 1990, we failed from there quite a few times. So people are going to call this a breakout. Gold shares are starting to perk up a little bit. Is gold firming again?
Yeah, approaching the 32 level, as we
Okay.
were talking earlier.
Yeah.
32, 34 area has the next static resistance area. But the general strength of commodity currencies, pound, and even the Japanese yen, the euro is the only laggard at this point, unable to settle above 14. But the rest is fresh highs against the greenback.
There is a question from CNBC to the Madame Chair. They asking, Steve Lisman is asking about, Yellen said that is concern for the global development, so it could be a month or maybe 1 year to take those developments back to the good path again. So this is making the Fed to move their projection to hike rates into the next year, and Yellen is answering that 4 participants move their projection into 2016 or later.
Yeah, I was reading about 3, but well, 3 or 4 members thinking that the first rate, 4 members, see hike after 2015, so, and 1 in 2017. So actually, I don't believe that that's a great guide of what's going on, but I do believe that we will be, the Fed is more concerned about what China has to say, that if we don't see an economic improvement in China, then yeah, there's a good chance the rate hike will be delayed and delay and delay again. But if the situation in China calms down, then the Fed will be less concerned about economic growth and therefore more willing to anticipate a rate hike. It will be funny if the Fed does not raise rates before the UK. Huh. That will be the bearish movement possible for the greenback in the long term.
So Luemo is telling me that he cannot hear me. So perhaps he's, I don't know, perhaps right now, yes. So guys, what do you think? Let's set some levels in euro dollar, in cable, or in Aussie that it's worth to see in the next few hours. What do you think about the euro dollar, Valeria?
Okay, as I was saying a few minutes ago, the euro is the one with less upward momentum against the greenback. I believe that because no matter what the Fed has done, Europe is still making easing, right? So I don't believe that the movement, the upward movement is still, it's not going to be as strong as other currencies. Anyway, if we manage to settle above 14, open the next candle, the 4 hours candle above the level, and extend the advance, we can go up to 1460, 70, where I do expect a stronger bout of selling interest, right? I don't see the euro rising much more than that at this point, but that's a probable bullish target. If we break above it, then yeah, the rally can stand up to 16 or so and approach to 16 for the next week. And in the short term, right, the 1350 area, 1335 is the lowest level it can pull back, right? 1335 is my level to watch, because if we break below it, the pair will get back into this latest range, right, below a critical support, therefore has even less chances to go higher, and we can go back down to 1280 and even 1210 this week low, okay? And for the pound, honestly, I do expect right now further gains. The pair has been broken above its Fibonacci levels, clearly recovering that 2-week slump. So right now, this main support is this area, 55, 60, 70. Okay, it did achieve my target, my bullish target for the Fed, which was 56.20, and there we are. So I'm not seeing much of an upward potential in here, maybe some consolidation before next move higher, but if we take the high, we can get closer to 57, okay, in the coming hours. Yeah, and I do expect that dips in pound will be seen as buying opportunities.
Okay, what about the dollar yen?
Dollar Japanese yen.
Yes.
Well, the pair is struggling with Fibonacci levels. Right now, it has pulled back and on this 2035 area. I would like to see it breaking below 120. Yeah, to confirm a downward movement towards this next Fibonacci support around 1930. Okay.
And below that?
What?
Yes.
Do you hear me?
Yeah, below that level, what is the next target? Do you see the dollar?
The upside seems very. What, 16 back? I'm not sure, honestly. What I'm seeing is that this area 2120, 2130, it's the 61.8% retracement of that 2-week slump, and this is a 200 simple moving average in the daily chart. So in between that area, selling interest is really tough to break, right? If you take a look, the pair has been trying but failing many times. So unless we close the day above this level, the upside seems pretty limited for me, right? And approaches to that area will be more likely be selling opportunities than signals of a change towards the upside.
What about the Australian dollar?
The Australian dollar?
Yeah.
Well, ever since bottoming around 69, Early September, it seems the commodity has been clearly in a recovery path, and the fact that we broke above that 72.40, sorry, level, which was strong resistance, static resistance level, suggests there's scope for further gains right now. Not in the short term, right? But if we held in above 72, I would expect the upward corrective movement to extend up to 74. Right, 74.40 is for me in the next critical resistance, mid-term, long-term. Right, 74, 74.40. That seems a nice probable bullish target. If we lost 72 again, then the risk will turn lower, but I'm not seeing that right now.
Okay, thank you. And the Canadian?
That's not my favorite one. Dale will tell you better.
Yeah. Dave, what do you think about the Canadian dollar?
Well, I agree with what Adam said earlier, and if crude's going to 50.52, this is just the beginning of the correction. Their level's down at 28, 26, so that's the way it looks to me. Higher Aussie now, lower Canada. They move inverse to each other. Everything else that Val said, I concur with on the euro. I know that I run an FX community, but I'm most excited about this recovery in the stock market to set up a shorting opportunity, because I still think that there's a probability that the flash crash low we had at 1830 in the S&Ps, and I think it was, I don't know, 15.2 in the Dow, will be revisited and taken out into the November timeframe. So I'm not sure how the dollar is going to react. I think that the way it's acting right now, Val, and this is interesting, you know, for months and months and months it was a strong dollar meant strong equities, but the last few days it seems like the market is enjoying a weak dollar, you know, giving Yellen her way, and commodities, which comprise a lot of different equities. Oil shares make up about 8% of the S&P. So this bear market rally in commodities and the sell-off in the dollar is constructive for the market, but just like I asked Adam around 50.52, would crude be a short, and where would gold be a short? So you could tell I'm leaning towards the long side of the dollar, and perhaps the next time the market sells off, the dollar becomes a haven, because right now the market is eating up a weak dollar and stronger commodity prices.
Okay, so there is two more questions. The first, what will be the headline for today for Valeria and for Dale?
The Fed disappoint markets. The Fed is worried about China.
That's right.
And you, Dale?
That nowadays we're in a global market environment, and global markets are more of a concern to the Fed than any time in my market trading history, and that until China stabilizes, they're not going to do anything. And I don't think that happens until later this year.
Yeah, so we postpone the hike rate for the next year, perhaps.
I think the headline could be China stays Yellen's hand from raising rates.
Okay. China stand.
Kudos Ted Matz on calling this scenario.
Yeah, that's right. That's right. That's what. Yeah. So finally, I will ask for a summary on what happened and what will happen in the next few hours and into the next week too. Valeria, ladies first.
Oh, thank you. I do believe that we are going to see a steady decline in the greenback over the upcoming hours, particularly because stocks are picking up momentum right now, and that will be extended into the Asian session most likely, right? And I'm also noticing that commodities, particularly precious metal, are running higher with really good aims. So I do expect that the greenback will continue sliding all through this Friday, right, in the short term. Longer term, I don't know. I was thinking earlier today that this week and last week, the US data has been quite disappointing, right? Besides employment and inflation, we have tepid data in manufacturing capacity, industrial capacity, whatever the report was, the data disappointed. So I'm inclined at this point to think that the greenback will continue under pressure, right? At least for this coming 2 weeks, for the rest of this September. And if data continues to disappoint, it will be even bigger, the weight over the greenback. Still, I do believe that the best choice when it comes to betting against the greenback would be pound or even Japanese yen, but not the euro.
Okay, thank you, Val.
You're welcome.
Dale, what do you think? What happening and what will happen in the next days?
Well, I'm looking for a lot of turning points between the 23rd and 28th. I agree with Val that the weak sister in this rally is euro. Otherwise, why aren't we above 117 right now? So I'm looking for shorting opportunities, possibly as high as at 115 level, 1470, and looking for the dollar to reverse late next week or the week after. And I cannot get long-term bearish dollar right now. And in fact, this week's action convinced me that this is a bear market rally in the euro. I still think it's a bear market rally in any currency against the dollar right now, and that everything is hinging on whether or not the S&P's put in a failing rally, the Dow puts in a failing rally, and that'll really be the test for the dollar. And I think it's going to turn into a safe haven on the next either wave C or 3 to the downside in equities. Once we complete, I'm thinking between 2030 and 2050 in the S&P, so I'm using that as a guide, and 17,000 to 17,200 in the Dow.
Okay, thank you, Dale. And before finishing, there is a question from the chat. Bedran is asking about the dollar Japanese yen. Let's Valeria answer that before finishing.
Okay. Well, as I was saying, the pair has been trading pretty clearly in between Fibonacci levels lately, and right now it's breaking below this 120.35 area, finding some short-term buyers around 120, right? But I do believe that the risk has turned sharply lower. Sorry, and there is a good chance that the pair will decline down to the 1880 region over the upcoming sessions. I don't see much of an upside as long as the price remains below 21.30. This is for me a line in the sun, and approaches to this level are mostly attracting selling interest.
Okay, thank you, Valeria. That's pretty much this. Thank you, Valeria, for coming today. Thank you, Dale, for coming today this late this afternoon. And
Yeah.
thank you, everybody, for coming for this show.
And thank you everyone for choosing FXStreet for your coverage of the Fed, of what is it, Groundhog Day. Thank you for watching the movie Groundhog Day with us at FXStreet.
Yeah, thank you. Really, it has been great to share this time with you guys. See you soon.
Okay, thank
you. Take care, Val.
Same you.
See you, Mauricio. See you, my trading warrior brothers and sisters. See you in the room tomorrow.
Bye-bye.
Okay. Bye-bye, guys.
Adios.
Adios.
So to finish, I just want to share, to finish with the image that I just starting the live coverage. Let's ask Helen again, when will the Fed rise interest rates? Who knows?
Only her hairdresser knows for sure.
Yeah. Don't know, man. Again, to raise or not to raise? Well, perhaps she's in the dark side. Today. Okay, guys. Thank you, Dale, and thank you, everybody. See you tomorrow in the
Mañana, buddy. See you,
Mañana.
wingman.
See you. Hasta la vista, baby. Bye-bye.